going on, guys? Welcome back to the channel. This is your boy Coach UV, and this is the Unique Trading Group. Listen, I got a special video for you guys tonight, so I hope you're ready to soak in some good game. This night is all about Tesla. That's right. We're going to be discussing Tesla and this pattern that I see on the charts. So we're going to go ahead and hop over to the charts. I don't want to hold you guys long. I know what you came here for, and here we are right in front of you. Listen, there is a glitch in the market, a distortion, a symmetry break, and most traders won't notice it, but you will. And right here on this chart, buried under all the noise, all the chop you may see, right? The fear, the algorithms are hitting bids like machine gun fire. Tesla is forming one of the most powerful structures in technical history right in front of you. And it's called the cup and handle. That's right. The cup and the handle. And I got a special presentation for you. I want you guys to know what it is and what it means and what's happening right now for Tesla. It doesn't mean chase, right? We're always predefining our risk, our entry, and our exits. But there is a technical setup setting up on Tesla, and I want you guys to be prepared for it. Now, remember, I am not a coach who's claiming to be some sort of financial advisor for anybody listening and tuning in. If this is your first time, all right, and for the guys who've been watching me, thank you. I appreciate you. But if this is your first time watching, I'm not a financial advisor. I'm only a coach and or mentor, and these videos are for entertainment and educational purposes only. So let's get entertained, all right? But listen, this isn't just any kind of pattern, all right? No, this is the one. This one means something. This one is a message, a signal, and a doorway to a lot of gains if you can catch it right. And tonight we're going to dive into that. We're talking about auction theory, all right, market maker psychology, algorithmic leaps, right, these traps that are set, and the intuitive nature of pattern recognition to uncover why this Tesla setup could trigger a massive short squeeze, an energy influx. All right, that means a lot of energy, a lot of self-fulfilling beliefs going into this move, and it's enough to feel like we just plugged into the matrix. So welcome to the episode again. Let's go ahead and dive in. The market really is a battlefield, guys. Okay, it's a battlefield of agents, right? Different people, me and you, the person listening, anybody who's trading, all skill levels are all happening at once. That's how remarkable the market is, and it's a reflection of human behavior. So that creates liquidity, all right? Dark pools, all right? Algorithms that never sleep, and the market makers who literally scope price like an architect shaping reality, all right? So they're the agents of the system, fast, merciless, precise. Remember the algorithms, right? But if you can come at them with a slight difference and not be the typical retail trader, then you won't get deleted and you won't blow your account. All right. The secret is just understanding that the agents have rules. All of these people have rules, predictable rules. All right, predefining your exit, your entry, and your risk. That's what it's about. They have rules. That's the edge. Finding a setup, sticking to it, and making it happen. Now, I want to make this simple. We're going to break this down. Now, looking right in front of us, we have this Tesla chart, okay? Now, why do I say it's a cup and handle? Anybody who drinks coffee understands, right? We have this cup here, and we have a handle, okay? That's the handle we have, all right? And right here, we have a neckline, all right? You got your neckline right at the top of here. And you want that neckline to be broken, all right? You want the neckline to be broken. Now, we got that temporarily, okay, on Tesla, as you can see right here, okay? That's that handle, okay? And we broke it right here, okay? Right here is where we broke it, okay? So we broke that neckline right here. All right, we broke it previously and we came back to retest this here cup and handle, okay? Just like right here. And now we're retesting these highs. And so we're looking for the next break is to be these necklines up here, okay? So if I remove everything off of my chart, this is the next area that Tesla's trying to target right here. That's the next area right here, okay? Now, I want to go over to something and show you guys what this cup and handle really means, okay? Shout out to Follow the Money. All right, the cup and handle pattern. All right, now my drawing wasn't as good as this one, of course, but you do have the cup and handle here, and you have these two, this parallel channel. All right, and you have a channel where prices bouncing back and forth from. All right, now if we go back to the Tesla chart, you're going to notice this same pattern on Tesla, and you notice what happens when it gets above this moment and breaks this trend. We get that parabolic move. Tesla's already started to initiate these type of moves already, and so we're just waiting on a perfect pullback. All right, so the time of this recording is 8:57, December 3rd, 2025. So you're gonna get this early Christmas present, this early gift before Christmas even comes. All right, so let's dive a little bit deeper now. All right, because it's all about mastery, right? Mastering one thing and making sure that you're up to date. So mastering the cup and handle chart pattern, trader's secret weapon here. All right, so what is a cup and handle pattern? Imagine you're looking at price chart and you notice a U-shaped curve followed by a smaller downward sloping price movement. Now connect the high points of the U-shaped curve to form the cup and draw a smaller parallel line to the right, forming the handle. Bingo. All right, you just spotted the cup and handle. Simple. This doesn't have to be hard. This could be real simple. A pattern recognition. If you do a researching or you Google search something about traders who make millions or people who've been in the game a long time, do your research on a cup and handle and pattern recognition and see what people say about recognizing patterns. These patterns literally reflect human behavior. That's right. The same lines you see when somebody's on a hospital bed, you know, in the movies, they have that box with the green line. So when a person's breathing, you see it go up and down. That's the breath. But when it's flat, there's no breath, no movement. It's dead. That's what a choppy market means. That's right. It's not really going anywhere. But when you see the breath, the up and down, you spot these points. And you can literally take that concept and apply it to the charts so you can make money. All right. But you got to have enough money and you got to have enough heart and you got to understand risk. All right. So the cup and handle, what does it mean? It's a bullish pattern, a continuation pattern. In simple terms, it indicates that a brief pause in an uptrend is happening. And once the pattern completes, the uptrend is likely to continue. So think of it as a little resting pit stop before the price accelerates further. All right. A little bit of money printing. Why is it important though? It's important because as traders, we love to jump into trend when the odds are in our favor. I mean, that's just really simple. Think about the millions of people who trade. You hear people who are successful, people who are not. But what does successful trading really mean? Successful trading is whatever you want it to be. But everybody's in trading to make money, right? Whether you are a gambler or you have some arbitrary goals, paying bills, these things can really distort your reality when it comes to trading. So that's why it's cool and very valuable to have a trading plan to predefine your risk, your entry, and your exit, and to find setups that's going to pay you more likely than none. It's about probability. And a misconception about trading is that you're always going to win or you have to be right or wrong, but you have to accept risk and have a healthy relationship with risk in order to risk the reward. People don't make a lot of money in trading being scared with fear. They actually study books and read documentaries on YouTube about how you can use fear to make money. It's actually a possible thing. So you should read about it, and it taps into human psychology. So it all correlates: fear, greed, and behavior of humans. And you see that on a chart. And the cup and handle is important because you're spotting out a very powerful ally and spotting opportunities. By recognizing this pattern, you gain the ability to position yourself strategically, getting in at a prime moment before the next bullish leg begins. All right. So I want to give you guys this quick thing here before we go back to the charts. I appreciate you guys watching so far. If you've been getting some value and enjoying the video, go ahead and smash that like button and do me a favor, subscribe to the channel. That way you don't miss any valuable drops. All right. Because this video here is cold as ice. That's right. Cold as ice. Now, how to use it in trading. Spot the cup. All right. You know what a cup looks like, right? First, you identify the cup, the part of the pattern. Look for that U-shaped curve formed by the price movement. The bottom of the U should be rounded, gradual curve, not like a V shape, but more like a curve, right? You draw your handle. Once you spotted the cup, draw the handle part, which is the smaller downward sloping price movement on the right side of the U. That handle should be relatively shallow compared to that cup. And don't worry, guys, we're going to revisit the chart so you can see this in real time, all right? Breakout confirmation. This is the juicy part. The pattern is not complete until the price breaks out of the handle's upper boundary. All right, this breakout is a strong signal of potential uptrend continuation. Keep an eye out for the high volume during the breakout to confirm the pattern strength. That's right. You need volume for stocks to move. Just like an airplane needs fuel to fly and a car needs gasoline to drive. A kid also needs candy to keep going. All right, this is a little joke. If you got kids, you understand that. All right, you don't want them off the walls, but you do want your price to be jumping off the walls as long as you define your entry, your exit, and your risk. All right, so measure the target. Estimate the potential price target of the uptrend by measuring the distance from the bottom of the cup of the pattern breakout point. Then add the measurement to the breakout point. All right. Now, let's go up here to the actual Tesla chart. All right, see this? All right, so we have our neckline here at the top. We're gonna put that back here. All right, now you know they spoke about a cup. All right, this is the cup they're referring to. Okay, here's your cup. All right, now you remember what we looked at. Okay, right in front of you. Okay, remember you have the cup. All right, and you have your parallel channel. So we're gonna do that on Tesla. Okay, stay with me, guys. All right, so let's put our parallel channel. Let's start it here. All right, and let's put it there. Okay, and this is where we are right now on Tesla. Okay, now most traders are waiting for that breakout. Okay, it could be the biggest payday of the week and for the rest of the month on the NASDAQ and the Qs. Remember that Tesla is part of the QQQ, the NASDAQ. All right, and so a lot of traders are waiting for, you see this neckline? If price breaks above here, this will be considered a breakout. If it pulls back, it's a pullback. So you have a combination trade of a breakout, pullback. Okay, now there are some traders waiting for that. Why? Because if it breaks out and pull back and holds here in this previous resistance level, right? Because price dropped here before it from here. If it turns into demand where price is holding steady, you'll see the 21 EMA here start to creep up and catch it, right? And that pullback happens, and we end up bouncing for the breakout pullback just to catch another leg up. All right, this right here is the move that I want to catch. This is one trade. This is one clue on the chart. Okay, guys, a breakout pullback. That's one clue on the chart. A breakout pullback. I was so compelled and so excited to make this video for you guys. I wanted to make the perfect video. This is actually my 10th time making this video because there's so many ways that I could have made it, but I wanted it to be simple. I wanted to give you some education and to give you some visuals on this pattern. It happens all the time. All right, and it's very rare when it happens this big on a monthly time frame. The fact that it's happening on a monthly time frame tells me that we can have months of Tesla just rallying next year into next year. There are price targets of 5 and 6, and so these are some of the realistic targets that Tesla could see over time. It could happen in a week. It could happen in a day. We've seen Tesla move $30, $40, $50 in one day. The bank that we transfer our money to does not give us any sort of percentage gain off of our money at all. All right, and so you want to take advantage of these things. And remember, if you're a beginner, check out the beginner videos I have down there in the link below. Subscribe to the channel, that way you don't miss any of these valuable drops. Okay, now that was the first clue. The second clue is going to be our actual measured target. So this measure move here, right? It moved from 211 all the way to 490. All right, so about a $250, $300 move. All right, and so once this neckline breaks, all right, you can see another $200, $300 move. All right, this move can replicate the same one. Remember how we said back on the cup and handle references we have here? All right, estimate the potential price target of the uptrend by measuring the distance from the bottom of the cup to the pattern's breakout point. Then add that measurement to the breakout point. All right, let's read that again. Estimate the potential price target of the uptrend by measuring the distance from the bottom of the cup to the pattern's breakout point. Then add this measurement's breakout point. All right, now let's go back to the charts. All right. Okay, so from the bottom of here, I just used this one, but the bottom would literally be this double bottom here, but I just used this one. And so that's even more money. So you want to say, hey, from 123 all the way up to $400 and something is a $400 move. So this is insisting that Tesla can make another $400 move from this break of that neckline. Where's the break of that neckline? Right now, that high is 474, and that will be the optimal target. Price is going to act like a magnet. 474 is going to act like a magnet. Now, about 3 or 4 days ago, I posted inside of the Webull community. Shout out to my Webull community. If you guys are watching and checking me out, I appreciate you guys supporting. But I posted 3 or 4 days ago on Webull that Tesla had a 447 target. Okay. I posted it in my chat, in the Discord, in the Swing Trade Alerts. All right. If you had enough money, right, to play it, if you research and find out what the reward and the risk was and predefine these things, you can actually see what you can make, what you can lose, right? But you don't just get into a trade thinking you automatically win. There's patience and time that has to go by. Think about that. 3 days ago, Tesla was at 430 something, and now we're sitting at 447. So my price target hit. I informed the group 3 days ago. So it took you 3 days to make about a $15 gain off of the money that you had invested. That's exactly what happens, okay? This is what goes on when you follow the unique trading group, all right? And so that's the 2 clues here: the breakout pullback and understanding the measure point, right? Which means if you wanted to get into this trade, you will want to try to do some leaps, all right? Leaps, L-E-P-S, all right? L-E-A-P-S, which are long-term security leaps in the option market. Some people like to buy shares because they believe in the company, and some people understand that options give you leverage. If you get enough time on your contract and buy them on a discount, you can always get the up move, all right? But if you don't get enough time on your contract and you don't even have a stop loss, of course you're going to lose. The market is designed for you to lose, but it's also made for you to make money. You just have to have a plan, all right? Even me and some of the best traders come along and they don't make money all the time, but we know how to lose. Losing is a part of the game, all right? So let's move along. Now I want you guys to understand something, that the handle right here that you guys see, this is like the final reset, all right? That handle right here, how price has came. It's breached this already, right? And now we have this sort of, I would say, a bull flag. Would you think so? This is a bull flag here. A nice clean bull flag as well. Yep. So not only do we have a cup of handle, but we have a bull flag. And this handle here is being broken. And there's actually another handle that you could say. You could call this the handle, right? You could call that the handle. And so once that handle gets broke, confirmation of a candle break, right? The candle and the upward of this handle right here, it gets broke, and it's also the break of the top of this range, which is a open range breakout. And if that happens, then you'll get a measure move. So this entire move that happened before, all right, the bottom of that candle was 325 and the high is 450. You do the math. That's $100 and something move on a monthly time frame. And how long did it take for Tesla to move up $100 and something? 1 month. So that means you have to get double, triple that on your contract so that you can ride the wave up while you're working a job, while you're doing this, that, and the third. So this is the premise. This is the way to think. Somebody's going to make the money anyway. And if you look at the chart, just look at the best times to buy. You see, most of the time it gets above the gray line. All right, get a little bit of momentum. If it's in a downtrend, you catch the downtrend. If you're an uptrend trader, you wait for the trend to break. And it's as simple as that. Simple line break. Okay, here's another one. Simple line break. Above the 21, ATM sound. Say it with me. To retest these highs and to break away. Profits got took and we retested the 21. It reset where it left from before. Same scenario, different time, different day. above the 21, ATM sound. Say it with me. Retest these highs, which price was before, and now we have not reset the 21, but we're showing some sort of strength. And so some traders are waiting for a pullback to that 21 on a monthly time frame. Can we get that before the upward move? We don't know. And the way to check that is to continually check the smaller time frames as the weeks and the days go by, because you don't want structure to break. All right. And the weekly is showing strength right now. Here's another cup and handle. Guys, listen, my targets on Tesla, next targets are going to be 460 and 470, where we've been at before. And 488 is the ultimate target. We have strength above the 21 EMA. We could reject here the same way we reject and range and fall back to retest some of these lows here. All right. But until we break below the 21 EMA, I can't say that. All I see is strength and an uptrend, higher lows. All right. And possibly some higher highs. And that's what we're looking for. So remember, breakout pullback trade. All right. Price to break above and pull back. Or either price reject here, pull back to the 21. Or to retest the bottom of these channels here in this area right here. But as it's looking, it looks like there's strength with Tesla above the previous close of last week on the weekly time frame. And also on the daily time frame. All right, and we got some volume stepping in. Now, what you want to see is, if you want to take a breakout trade on Tesla and for you to trust it, you want to see a lot of volume come down here, guys. All right, that's what you want to see. You want to see some volume coming stepping in. You want to see a lot of big green volume stepping in. All right, you want all that volume to come in. Just like right here. See how that blue volume came in above that 21, and we shot up right here on Tesla from 347 to 466. Now let's just put that in perspective quickly. This move happened on September 12th. All right. This is one of the days where I gave out a call signal on Tesla. September 11th. All right. Rest in peace to all my 9/11 victims. But September 11th, we got above the 21 EMA. And we went from 344 all the way to 466. That's 100 plus move. And it happened within a matter of 3 weeks. So it didn't take a month or 2 months or 3 months. It took less than a month. And getting into the position, understanding these patterns is how you're able to take advantage of it. And guys, I'm telling you, if we get above the neckline, Tesla is going to go parabolic off of some sort of news. All right. Tesla has chips coming out. It's a lot of other things going on. And a lot of people are trying to short Tesla at the wrong time. And so I do stress waiting for a pullback if you're not already in. But the cards have been set. There is money going into Tesla. Check the records in the 13F filings. Check out the institutions who are holding it. They're dumping money into this stock with a lot of money, and we got a little bit of money. So they're risking way more money than the average person. If you can learn to take the opportunity, right? Open up your brokerage account, paper trade, practice this stuff. The things that you learn and from different gurus on YouTube, paper trade and simulate these things so you can gain confidence and see how these things work. So you can never call it a lie. You can never call it a fluke. And nobody can ever tell you something that you don't know. You can know for yourself. I stress that. I've been doing this for a long time. And only the people who survive, who stick with it, who really learn this, get that insight. It's very intuitive. You can't teach some of these things. It's just in nature, like pattern recognition. Somebody else might just see green and red candles, but I see a pattern, all right? Human behavior into a new year. And that's what I wanted to talk to you guys about, all right? So as you see all of these things here, I just want you to understand where the algorithms are hiding at, all right? Algos are hiding right near demand zones where price has previously left from before, okay? Take off these charts here, all right? So algos are at previous demand levels and on your structure. See that? You make your channel and simple trend, you got your higher highs, your higher lows, and then on downtrend, your low lows and lower highs. Right here is an uptrend, higher highs and higher lows. These are where the algos are sitting at your pivot points. That's where they're sitting at your pivot points. And you got to understand that. These are where the algorithms are sitting at. Previous demand levels. In my book, I talk about this, I think in chapter 6, and that book is down below in the description. I talk about how you can spot institutional levels and how to spot them out. The footprints, they're always here at the ranges, right? Where price move from a lot. That's where they are. It's real simple. It's not really hard. It's right in front of your face. Where did price leave from? Right there. It went here. It was already previously there before. There's your footprint. This is how you trade institutional footprints. Where did price go at? To a previous level where the institution was. Right here. That's where we are again. And it's the same old, same old. If you could just have your entry criteria, where do I want to get in at? And can I time it? If I can spot where I want to get in at the best risk to reward, a high probability setup, then I can take that trade, accept the risk, and wait for the trade to play out. That's one of the secrets. It's an energy influx. The market just transfers money from the impatient to the patient. And when the volume contracts, predictability is not really hard to see. When the volume comes in and these setups come, it's not really hard to see. Price compresses into a trigger like a micro range, and liquidity sits slightly above these midpoints. All right, you can't see that. Look right here on this chart. When I say price sits at a midpoint, all right, from here to here is a range. If you put a box over this price movement, you have an established range. Where is the midway point? Right here. You see it? The midway point is right here on the 21. And what is price doing? It's pushing up right there. Okay, come on, guys. It's right in front of you. All right. So listen, I'm going to go ahead and wrap this video up. It's been long enough. I want you guys to understand something. This is a very powerful trade. And Tesla is waking up. This is your awakening. I'm giving you the game. I'm telling you about it ahead of time. I'm going to recap this video. So remember, I was the one that told you. All right. So we're not here to predict. We're here to interpret the charts, to decode, to see what the crowd cannot see. Tesla's cup and handle is more than a pattern. It's a message to be prepared. When the structure is right, the opportunity becomes inevitable. So most people will ignore this moment, but you're here listening. You see the glitch. You see the code. You see the setup. Now it's time to choose the red pill or the blue pill. All right. I see you guys in the next one. And remember who brought you this special video. Tesla cup and handle, man. Let's make some of this money. Until the next time, guys. Peace.